Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, is paper trading in the stock market a waste of time? Answer by Jason NG. Well, I'm sure you have heard things about how simulator is different from real trading and how a lot of people who apparently do very well in simulated trading actually end up doing very badly in real trading. I mentor my students using simulator as well, and I don't see a significant difference in performance between my real account and their simulated account when we do everything correctly together. However, a lot of my students who start to trade for real begin to run into problems, and I followed some of their trades and found out the main reason why simulated trading is different from real trading. Stress. The stress of handling real money. The stress of seeing real wealth tick away before your very eyes by the second. This is the kind of stress that separates the professionals from the amateurs. For most non-professional traders, handling real money for the first time, especially money they cannot afford to lose or large sums of money, the stress that involves usually make them do very random actions that breaks every single rule they followed when they were virtual trading. You don't have to break many of your own rules to start losing money in the stock market, and especially in the options and futures market. This is why I always mentor my students to start with virtual trading and then graduate not to full-on real money trading but practice real trading using a small amount of money of maybe $500. When you really get the hang of that amount, double it, then double it. You need to train yourself to handle more and more money because it can feel very different. That said, paper trading isn't a waste of time. Like my approach with my students, paper trading is the first step to getting your procedures correct. After that is down, you can then move on to dealing with the psychological part of it in real money trading. Daily U.S. Stock Market, my U.S. market analysis blog. Stock options picks for explosive returns, my picks and mentoring service. Answer by, on Indidar. No, it is not a waste of time. It teaches you to observe price movements and understand how the market works. You can use it to backtest new trading strategies before you apply them to the real market without risking any capital. But, in reality, paper trading and trading real-time are worlds apart, mostly because of the emotional component that comes into play when you start trading with actual capital. Paper trading will give you some confidence to enter the market. However, your mettle will be tested only when you trade with real money. So, after you have garnered enough confidence to enter the market, start with a small amount of capital when you start trading to get used to trading real-time. Try to calm your nerves and start out by netting small profits or losses. After you get used to keeping calm and start making small regular profits, you can risk a little more capital to garner greater returns. Always remember that learning to trade is a process and avoid diving head first by risking all your capital from the very beginning. Good luck. Goodwill. Answer by Robert Berry. It's not a waste of time. I still paper trade new ideas, new combinations of tells, oscillators, methods and markets. By learning to find indicators that demonstrate reliable hints to support our decision making, we can find opportunities for improved entries, adding to positions, taking profits, spotting reversals and exits. I strive for emotionless trading and use the practice to develop strategies and rules for trades that make it easier to comply with. That and discipline to my trading plans provides me with good results in my trading portfolio. If you intend to trade like a Wild West shooter, without a well-practiced plan, be prepared to lose your trading funds.